Imagine waking up to a formal inquiry from the Federal Tax Authority requesting a 3-year audit of your MT5 trade logs. Without a clear paper trail, you risk having your margin capital and bank accounts entirely frozen. For a decade, the UAE operated as a consequence-free environment for Forex gains, where traders scaled their accounts with zero tax liability. In 2026, the government transitioned to a mature regulatory environment, creating a high-stakes legal distinction between personal savings and commercial business income. Continuing to trade high volumes under the assumption of absolute tax immunity is now a critical liability for your wealth. Securing your assets in this new era requires passing specific government classification tests to prove your status. The Federal Tax Authority uses a diagnostic framework called the activity test, which prioritizes your execution style over the actual assets you buy and sell. The government looks for economic substance, indicators like a dedicated office, professional data feeds, or trading as primary income to classify you as a taxable business. This scale marks the profit test, a net profit threshold of AED $375,000, or roughly $102,000 USD. You calculate your tax on net profit, not total wins. Deductible business expenses like VPS subscriptions, hardware, and professional education fees lower your total taxable base. The 9% corporate tax applies only to the profit exceeding that initial AED $375,000 mark. Traders with gross revenue under 3 million dirhams can elect for small business relief, effectively remaining tax neutral while they build their track record. Maintaining a rigorous internal audit of your habits and expenses is your first line of defense against excessive tax exposure. The location test determines whether your physical presence in Dubai actually grants you international tax protection. To secure a tax residency certificate, the standard requirement is 183 days of physical presence within the UAE. The 90-day rule allows digital nomads to maintain residency if they hold a valid visa and a permanent home here. This activates double taxation agreements that legally prevent foreign governments from taxing your local gains. Trading through an onshore license exposes you to the 9% tax once you hit the profit threshold. Conversely, qualifying free zone status can preserve a 0% rate for specific types of passive income. The Dubai International Financial Center offers the institutional infrastructure and advanced software bridges required for high-stakes professional trading. The Abu Dhabi Global Market acts as a secondary institutional hub, providing the high-level regulatory environment used by the world's largest financial firms. Correct residency and jurisdictional placement mathematically eliminate the threat of dual taxation. The 9% corporate tax secures your position within a stable, world-class financial ecosystem. Maintaining that stability requires adherence to the 5-year rule, a mandate to store all financial records, including bank statements and trade logs, for half a decade. An airtight audit trail matches your digital bank ledger directly to your raw trade logs and prop firm contracts. Mixing personal savings with business margin capital triggers anti-money laundering flags, which can lead to your local accounts being frozen. Professionalize your setup by utilizing separate bank accounts and dedicated performance tracking tools. Rigorous, proactive compliance is the ultimate form of risk management. Download our 2026 checklist and use FXNX's built-in tracking to ensure your trading desk is natively audit-ready.